and seeing a Bitcoin tab.
Treasury Secretary Scott Bessent says the launch of these dollar-pegged stablecoins could unlock a $2 trillion market.
And that's because the OCC just allowed banks to hold crypto, and the Senate passed the Genius Act to integrate the multi-billion-dollar stablecoin market into the U.S. economy.
This legislative win for the crypto industry, the Genius Act passing in the Senate earlier this week, the bill establishing a federal framework for stablecoins, and now going to face a vote in the House.
Stablecoin legislation is expected to clear the Senate this week. Stablecoins underpin most of the $3.3 trillion market for Bitcoin.
And the best part is that it's actually going to have real rules and regulations to protect consumers. And because all of this is happening, CEOs of major companies are starting to talk about it.
And we've been embracing and building for years, preparing for this moment. The Genius Act has now passed the Senate, as you know, and is expected to pass the House. I think that'll give regulatory clarity to stablecoins. And if stablecoins become a mode of currency that people want to embrace around the world, we will enable that on the Visa system and scale that to those billions of endpoints. That's what you need to do well in payments. That's what Visa does better than anybody in the world.
Now, here are the 4 game changers that I want you to know about that are happening right now. The Genius Act, the Clarity Act, the Bitcoin Act, and the Federal Reserve's own green light for banks to get involved. Pretty soon, we're going to be able to easily send stablecoins across different networks, making instant, low-fee payments as easy as sending a text message. And what this will do is it's going to build a bridge between the legacy banking system and the $200 billion stablecoin market, and that will have huge consequences on assets like Bitcoin.
JP Morgan announced its own stablecoin-like product called JPMD. Payments firm Fiserv announced a stablecoin to pair with the 90 billion transactions that it processes every year. And even Walmart and Amazon are reportedly looking into their own tokens.
There's a lot that's going on, and in today's video, I'm going to explain each of these changes and how banks like the Federal Reserve have quietly rolled back their crypto restrictions and show you exactly what this will mean for your wallet, your investment strategy, and the future of not just U.S., but global finance. I want you to be ready for the next era of banking. So with that said, let's get into it. Hi, my name is Andrei, jikh. Hope you're doing well. Come for the finance and stay for the crypto. This video is going to have a lot of complicated acronyms and banking words you might have never heard before, but I'm going to try to explain them as I go. So first, stablecoins. Stablecoins are meant to be digital dollars. In other words, they are cryptocurrencies that try to maintain a 1-to-1 ratio with the US dollar. So one stablecoin is always redeemable for one real dollar. And because they track the dollar, stablecoins don't swing 10 or 20% in value in a single day like something like Bitcoin might. They trade at roughly $1, give or take a couple cents. Now, why does that matter? It matters because stablecoins let you move money instantly, 24/7, anywhere in the world, no bank holidays, no multi-day wire delays, and with fees that are a fraction of the cost. You can pay rent, send dollars to family overseas, or move money between exchanges without converting back to dollars every single time. Now, in the world of decentralized finance or DeFi, stablecoins are the on and off ramp for everything. From lending and borrowing, stablecoins give us the stability and familiarity of the dollar, and up until this point, they were not a big part of the US economy. But that's all about to change. Before Congress ever wrote a single line of crypto legislation, regulators flipped the switch on May 7th, 2025. The OCC dropped Interpretive Letter 1184, which officially told nationally chartered banks you may custody and transact crypto under our existing safe and sound rules.
OCC-regulated banks may provide custody services, including the safekeeping and secure storage of cryptocurrencies and other digital assets, all on behalf of their customers.
That moment is what gave banks the green light to hold Bitcoin and stablecoins, and it set the stage for all the major bills that came after it, which I'll help explain. So first, let me start by explaining the OCC's Interpretive Letter number 1184. So the OCC, short for Office of the Comptroller of the Currency, basically the OCC is the federal agency that gives out banking licenses and makes sure that banks are following all the rules that banks are supposed to follow. Now, when you hear nationally chartered banks, it means institutions licensed directly by the OCC, aka approved. And under this guidance, any bank with an OCC charter, which are most of the major banks we bank with, can custody or allow the deposits of crypto assets under their safe and sound banking standards. It's a long way of saying that the major commercial banks of the US are approved and can now hold Bitcoin and stablecoins and other tokens in secure cold storage vaults. They'll be able to buy and sell orders at your direction the same way they do with stocks when you call your bank, and they can even stake proof of stake tokens to earn some interest as long as they have risk management policies in place. They're following all the laws of anti-money laundering rules. And because of all these changes, major custodians have already filed applications to be able to do this, which tells us bank-backed crypto custody is almost a guarantee at this point. It's not here yet, but it's coming. In a nutshell, what all of this does is it sets the stage for the US economy to integrate digital assets with our dollars and deposits. But this is just the opening move. Next, I want to show you the Genius Act and how it's going to integrate this multi-billion-dollar stablecoin market into the economy. That's the Genius Act, which stands for Guiding and Establishing National Innovation for U.S. Stablecoins, is not just another crypto bill. It's the first time Congress has created a framework for stablecoins. Senator Cynthia Lummis and Senator Sherrod Brown created the bill, and surprisingly, it has a lot of support from all sides. In the Senate, it passed with a 68-30 vote, which is one of the biggest margins for a textile piece of legislation, and here's exactly what it does. First, it says that only federally insured banks or non-bank firms approved by the OCC, remember the same agency we just talked about, can issue payment stablecoins. So only banks and institutions approved by the OCC can integrate these stablecoins. Number two, full reserve backing. Instead of fractional reserve banking, which is the system we run on today, stablecoins have to be backed one-to-one by high-quality liquid assets like cash or short-term treasury bonds, and they have to be kept in separate reserve accounts at a Federal Reserve Bank or equivalent. The third thing it does is it says issuers will have to publish a third-party audit each month proving their tokens are fully collateralized. Now, collateralized is just a fancy term for backed by something of value. So these tokens can't just be magically printed out of thin air. They have to be backed by real value, and this is good. Now, number four, stablecoin programs have to follow the Bank Secrecy Act, meaning they have to follow what's called KYC and AML, and they have to follow the travel rule standard. By the way, travel rule was created so that bad actors can't send money anonymously, because every link in the transfer will have to know who started it, who's getting it, just like with a traditional wire transfer. You know how you have to put in a lot of that info for a wire transfer? Same idea here. And once the Genius Act becomes law, of which there's a real chance that it could, stablecoins should be just as reliable as your checking account. But that's only half the story, because next up, I want to help explain something called the Clarity Act. Now, the Clarity Act is a bill from the House that finally draws hard lines of what is what and what part of the government manages it. Now, before Clarity, if you remember, crypto projects lived in a weird gray zone. Like some tokens got hit with the SEC, others claimed they were commodities, but nobody knew where the rules started or where they ended. And because of that, it was easy for the previous SEC administration to sue crypto companies because there weren't any clear rules. This bill changes all of that by breaking it down into three clear buckets: securities, digital commodities, and payment stablecoins. Now, the first is securities, which is any token sold as an investment contract. Remember the 2017 ICOs promising they're going to be the next Bitcoin, future profits, right? That falls under the SEC, or Securities and Exchange Commission, and that is their realm to patrol. Now, if a token is classified as a security, then exchanges and brokers that sell them will have to register like they would for the stock market. They have to file regular disclosures and follow anti-fraud rules. This is good. Now, the second bucket is digital commodities, which are native blockchain assets. The biggest one is obviously Bitcoin and most layer 1 tokens, and that will be managed by the CFTC. Now, platforms that trade digital commodities will have to register as futures or swaps dealers, and they have to abide by market regulations and separate customer assets. Now, the third bucket is payment stablecoins, and these get oversight from both agencies, the CFTC and the SEC, and it's tied back to the Genius Act framework we just talked about. So both regulators have to make sure that they stay fully backed and consumer safe. Now, you might also be wondering, well, what if companies try to get around these rules by incorporating overseas? We've seen a lot of that happen in crypto, incorporated in the Cayman Islands, right? They thought of this, and here's how they want to protect against that. Representative French Hill and Representative Maxine Waters built a bipartisan coalition that prevents U.S. projects from going overseas. The bill also has strong support, and votes are expected really soon, perhaps the next week of July. So once the bill is passed, the government will know exactly which rules apply to your favorite tokens. But what this act ultimately does is it's going to create new exchanges and make our favorite existing ones hopefully safer. And token launches will be much more clear and consumers will have more protection. That's the hope. So that's the second act. And then there's the third act, which is the Bitcoin Act, which is the proposal to make Bitcoin an official U.S. reserve asset. So imagine the U.S. Treasury holding up to 1 million Bitcoin along with gold. So I'll explain exactly how realistic that is, who's backing it, and what it could mean for Bitcoin's price. So the Bitcoin Act was introduced by Senator Cynthia Lummis in March 2025, and would make the U.S. government a buyer of Bitcoin, essentially creating a strategic Bitcoin reserve along with gold. And here's what you need to know. This act calls for the U.S. Treasury, in combination with the Federal Reserve Bank, to buy up to 1 million Bitcoin, which is roughly about 5% of its total supply. Now, unlike movement spending, though, this would not need new taxpayer dollars or debt. Instead, it would shuffle the Treasury or Fed holdings into Bitcoin. Now, in practice, that means the U.S. Treasury could take parts of its cash holdings, its short-term treasuries, or other liquid assets like some overnight reverse repo balances or excess cash in its general account, and then swap them for Bitcoin on the open market. And because these assets are already on the U.S. balance sheet, no new tax dollars are needed to buy Bitcoin. So when people are like, well, I don't want my taxpayer dollars funding Bitcoin, right? They won't be. The bill is not super specific about how they're going to do this, and that is very much on purpose to give them as many options as possible in the future. Now, to protect the assets, though, the bill also talks about a decentralized vault network. So think of federal-grade cold storage with multi-layer security and strict audit requirements and probably physical security protocols, I imagine, all of that stuff. The Bitcoin Act also says that private citizens will always have the rights to buy, hold, and self-custody Bitcoin without government restriction. This is super important because this will help people worry less about the Bitcoin ban. Now, the people who support this bill argue this reserve will actually help the U.S. have more financial strength, it'll help against inflation, and it's a way to diversify our $37 trillion debt. But the real question is, though, how realistic is all of this anyway? And the answer is, I don't know. The bill has strong backing, and Congress has held hearings, and at first people were really excited, but I think the full Senate passage isn't necessarily guaranteed at this point. And the White House hasn't really said that they're going to 100% support it yet either. It hasn't passed anywhere, so realistically, maybe a slimmed down version might appear in the future. But even if a fraction of the Bitcoin Act passes, like especially the one about being able to self-custody without government intervention, would be huge. It would mean Bitcoin is here to stay again and be a part of the U.S. economy. Technically, it already is, since the spot ETF approvals, but this is why Despite all the scary headlines that we've been seeing on the geopolitics level, Bitcoin has been really steady, and that is really incredible. There's more and more buyers every single day, like governments and even Bitcoin treasury companies. And also, I'd argue that some of the biggest news is actually happening behind the scenes, and it's something that Jerome Powell recently said about crypto. So in April of this year, the Federal Reserve withdrew its 2022 letter, and that letter is what forced banks to get pre-approval before touching anything to do with crypto. And now, all of that is changing. It means banks can now move forward on custody and trading and even stablecoin programs without waiting for a thumbs up from the Federal Reserve. And that's really what has allowed all of these changes to take place that I just explained. It's what gives them a chance at becoming law. And believe it or not, the person who made all of this possible is Jerome Powell, the guy in charge of the Federal Reserve.
And so banks are free to provide banking services to the crypto industry, to crypto companies. And banks are also free to conduct crypto activities as long as they do so in a way that is, protective of safety and soundness.
Jerome Powell went on record and said, banks are free to conduct crypto activities, which is good. But I think the one thing they'll have to say, remember the risk. That freedom will come with a major burden, which for the banks is their reputation. Because banks have spent decades and trillions of customer dollars building trust as these companies that protect and manage our savings. But now, by touching crypto and stablecoins and a lot of these unknown coins, they're stepping into an unknown world that a lot of people, I think, still associate with hacks and scams and risk. And that's why I think banks can't treat crypto custody like it's just another product. They'll need to be on top of it. Hopefully they're aware of that, but that's why I think this will probably take some time. Once it is here, though, I think what Michael Saylor said about the price of Bitcoin is 100% accurate.
I'll leave it at this thought, which is when your bank tells you they'll buy Bitcoin for you and they'll make it really easy, and you can do it on the phone, it'll cost you $1 million Bitcoin.
By the time your bank is ready to custody Bitcoin and they decide to call you about it, the price will have already gone to the moon. For now, though, the world doesn't know that this is quietly happening behind the scenes, and that's why there's still such a gap between Bitcoin's current price and where a lot of smart money thinks it will be in the near future.